U.S. consumer prices rose at a modest 0.2% in June. Expectations were for 0.3%. So we did see a beat on the month-over-month numbers. In addition, the yearly inflation rate dropped to 3% from 4% the prior month. And again, that was key here because this is again showing that inflation is dropping. Now, you'd think this is all roses, right? Everything is good. But again, just like most things, we have to delve underneath the hood to see. And this is the headline kind of that caught my eye. Now, listen, stock market is rallying. We've seen gold popping up. We're seeing even Bitcoin inching up a little bit, although we'll get to that. The price action continues to be very, very muted in Bitcoin. But this is what got me here. Here it says, the decline is not quite as fast as it seems, however.
As a result of some slowing down, costs, and simple comparisons to a period of time when price increases were running at a more than 40-year high, inflation fell to its lowest annual rate for more than 2 years in June. The Consumer Price Index, which tracks inflation, rose 3% from a year earlier, the most since March 2021. The index, which tracks a wide range of goods and service prices, rose 0.2% on a monthly basis. The core CPI decreased by 4.8% from a year ago and by 0.2% on a monthly basis when volatile food and energy prices are excluded. In both cases, gains of 5% and 0.3% were anticipated by consensus. It was the lowest yearly rate since October 2021. The Federal Reserve may be able to take some comfort from the data as it attempts to lower inflation, which was running at a rate of approximately 9% annually at this point in 2022, the most since November 1981. This data will be welcomed by the Fed as proof that their policies are working as intended because inflation has declined but growth has not yet stagnated. The core inflation rate, which is still far higher than the Fed's 2% annual target, is what central bank policymakers typically focus on. The central bank is likely to raise rates again later this month, according to Matteo, despite the news. On his chart illustrating how the CPI report has affected different risk assets, Gareth Soloway offers his findings. He also emphasized his bullish outlook for all coins, such as Matic and Solana. Gareth continued by predicting the prices of gold and silver, claiming that the market movement indicates a very strong rally for the precious metal. Please hit the subscribe button, hit the like button, and leave your comments below as we move into the video.
Positive news on Bitcoin in terms of ETFs, spot ETFs, multiple filings for ETFs. Yet, even on today's CPI number, what type of move are we getting out of Bitcoin? I mean, what, like, really? This is the little uptick we're getting today on the daily chart. Now, listen, this is still a bullish consolidation pattern. It's one of the longest bullish consolidation patterns I have seen in my career in crypto, as well as even in stocks, but it is still inside of the 30,000 to 31,000 range. So it still is slightly bullish, okay? But it continues to irk me. Why hasn't all this positivity, all this risk-on behavior why isn't it causing us to see a breakout on Bitcoin? Okay, now again, I think once this if this breaks out, you're going to get a big move. I have an upside target. First target's around 35,000. So you're talking another $4,000 up. That's over 10% up. But it has to do it. And we've had good news after good news after good news for Bitcoin specifically in terms of ETFs not being labeled a security by the SEC, all of these other things. I mean, MicroStrategy's bought a ton more Bitcoin, all of these positives, and we've still been stuck at the same level we were in April. So again, as a trader, as an investor, all you need to be focused on is the 31,000 level here. Let's see if we close above it, right above this area here. Or on the bearish case, do we close below this trend line here? If we close below, I'll show you where we're going to go. All right, we're going to go right here. This is going to be your target, basically 26,600, give or take. That's a classic trend line that is a no-brainer. So again, break here, we go here. If we move to the upside, then I think we head towards this area right here, right around 35,000. Your max upside, by the way, on Bitcoin would be this area. In fact, I can go back even further here. Bear with me as I draw this in. If we take this pivot high here, look at this beautiful pivot and trend line. Look at that. that would be that would kind of be your maximum upside that I could see in a short amount of time on Bitcoin, would be about this 45,000 level. You can see trend lines here, it touches these lines, and that's where we had a big breakdown. That could be a retrace to that level. Now, by the way, what's interesting about this 45,000 level, it's basically equidistant between this low and this high. So it would essentially, and again, I can do the fibs. I think it's pretty close to a 50% retrace. Let's see. Yeah, very close. So right there's your 50% retrace right here around 43,000. So you're essentially at a 50% retrace from your highs to your lows. So little things like that kind of warrant attention. But that's, again, contingent on us breaking through 31, going to 35, and then breaking through 35. All right, so it's kind of a long way away, but it is something worth keeping an eye on. Now, we have seen altcoins starting to make moves here. Altcoins like Matic had a breakout. Take a look at Matic here. Beautiful little breakout on this over the last couple days. It's been consolidating. Again, upside maximum would be about 83 cents, would take us back to this level right here. And then Solana has been a rock star. It continues to be one of my favorite cryptos that are not Ethereum and Bitcoin. And you can see here, look at the move. It's up from $14 to $22. That's a 50% move. And it's even trying to break here. If you look at the bigger picture, you had this up move, and then this is a channel, a bullish channel. That's your upside target, $24.40 on Solana. So again, Solana, by the way, you wouldn't be chasing Solana here. At least I don't. I don't chase anything. It's a great move, but it's obviously up 50%. You're not paying up 50%, especially for your reward of another $2. That's less than 10% on this trade. But what I would say is if it hits this line and pulls back and makes a bull flag or consolidation, that's the buying opportunity, right? Like a 50% retrace type thing. That would be an opportunity to go long on that chart. So if we look at gold here, okay, here's a down sloping trend line, pulled back, broke out, and then look what it did. It retraced to the scene of the crime. What has gold done since then? It has started to move to the upside. So again, we're seeing gold beginning to move up here on the charts. And again, that again signals that support level, a retrace to what I call the scene of the crime. That again is a bounce off of it. And gold again is up today. Why is gold up? The dollar's down, right? I mean, that's the basics of it. So again, in terms of the gold chart, where are we looking for this? So I've called, ever since we were at this high, I've said to people, and I've said it in this broadcast. In fact, if you go back 2, 3, 4 weeks, every single week we talk about gold. And I kept on saying, guys, it should pull back to this trend line. Well, it finally did. And then I said, okay, now you're looking at upside potential. Now you're looking at maybe a move and a breakout above the all-time highs, which if we put a trend line in here, we can clearly see, look at this. That's your all-time high level. So the way this works, education, here we go, education 101 in investing. You have a high pivot and you pull back. When you hit the high pivot again, probabilities, that's known as a double top, you get a big pullback. Big pullbacks off double tops. When you hit a triple top, it's a small pullback, and usually you'll come up and break out at that point. So again, the idea here is that we've gotten the shallow pullback in gold. My guess is this is the beginning of a bigger move up in gold that we should take out by year end, this all-time high. And actually, I wouldn't be surprised to see 21, 22, even 2,300 by year end on gold. Okay, so again, couple little tidbits there that I want you guys keeping a close eye on. All right, let's flip over to silver. Then we're going to get into some stocks. We have some stock movers and some levels on the S&P 500. All right, so we are seeing silver moving up here. Now, silver's a little trickier of a commodity to gauge, and I want to show you this, guys. So when we had a pullback on silver, it was a much more dramatic pullback. Look at how you have this line. This is almost the inverse of the gold chart or the yield chart that we were just looking at. You have an upsloping pivot to pivot, and we broke below it. So what does this tell us? It tells us that if you get back up to this $24 level, $24.35 to $24.40 on silver, this is probably a level that you're going to pull back off of. All right, now you might say, well, how does that mesh with what gold is showing us, right? I mean, if gold is showing us that it could be headed higher, why would silver be going up and then pulling back? And the answer is twofold. Number one, gold could go up as well with silver on this move, and then gold could just have a small pullback, you know, like a 3-day small minor pullback. Silver could have a much bigger pullback. The other thing to always remember on silver is that it's an industrial metal. So as long as this soft landing narrative is in play, silver is going to outperform gold to the upside. All right, you're going to see bigger moves, and you can see that today, right? I mean, today silver's having a move of 2.35%. Gold is only up right now 0.6%, right? So there's obviously a huge difference there. Silver is outperforming gold. So as long as the soft landing narrative, the fact that investors are saying, okay, the Fed can totally make us into this perfect landing where everyone sings kumbaya and everything goes great, well, then silver's going to outperform. But if you get into a point where we start to see interest rates continuing to climb, all right, or at least staying stationary, and jobs continue to decline, which, remember, we saw the non-farm payrolls report last Friday that signaled a slowdown in the job market. That, if that continues and we don't get this soft landing, silver will underperform gold because, again, it is an industrial metal. It is used in the building of things, in batteries, etc. It's a very, very good conductive metal.
What do you think about possible interest rate increases? Post your opinions in the comments box below and let us know what you think. Don't forget to subscribe, like, and turn on alerts for this video. Thank you for watching.